Artificial intelligence is changing almost every industry, from healthcare and finance to transportation and entertainment. But here's the big question. How can everyday investors benefit from the AI revolution? In this beginner-friendly guide, you'll learn what AI investing is, the different ways to invest, the risks, and how many investors approach this fast-growing sector. What is AI investing? AI investing means investing in companies that develop, power, or benefit from artificial intelligence. Think about the technology behind: chatbots and self-driving cars, medical diagnostics and cloud computing, robotics and AI assistance. These technologies require enormous computing power, software, and infrastructure. Companies providing these technologies may benefit as AI adoption continues to expand. 4 ways to invest in AI. Option 1. AI chip companies. AI models require powerful computer chips. Companies designing advanced processors are an important part of the AI ecosystem. Option 2. Cloud computing. AI runs on cloud infrastructure. Businesses offering cloud computing services support AI applications around the world. Option 3. Software companies. Many software companies are integrating AI into their products to improve productivity and automate tasks. Option 4. AI ETFs. Instead of choosing individual companies, some investors prefer AI-focused ETFs. These funds provide exposure to multiple AI-related businesses in a single investment. Benefits of AI investing. Many investors are currently excited about artificial intelligence because they believe it has the power to transform global industries for many years to come. Some potential benefits of this revolution include increased productivity, business automation, faster innovation, growing demand for AI infrastructure. Of course, no investment is guaranteed to succeed, and future outcomes are uncertain. Risks beginners should know. While AI offers exciting opportunities, there are also risks. AI-related stocks can be volatile. Expectations may already be reflected in prices. Competition is increasing rapidly. Regulations and technological changes can also affect companies. That's why many investors focus on diversification and a long-term perspective, rather than trying to predict short-term movements. How beginners can start. If you're just starting, many investors begin by learning the basics, investing consistently over time, diversifying their portfolio, avoiding emotional decisions, and continuing to educate themselves as the market evolves. Every investor has different goals and risk tolerance, so it's important to research investments carefully before making decisions. AI is more than a trend. It's an evolving technology that is already changing businesses around the world. Whether you invest through individual companies or diversified ETFs, understanding the AI ecosystem is an important first step. The more you learn today, the better prepared you'll be to make informed investment decisions in the future. Which part of the AI industry interests you the most? AI chips, cloud computing, robotics, or AI ETFs? Let us know in the comments. If you found this guide helpful, subscribe to Capital Pulse Investing for more videos on AI investing, ETFs, personal finance, and long-term wealth building.